Hi, I'm Keon, a research analyst with Thomson Reuters Lipper, and I'm here to speak to you about fund flows activity for the week ended Wednesday, November 16th. Let's start by taking a quick look at this week's market news. Take a look at what happened in the market this week. Oh, it was a big week this week, wasn't it, folks? With the surprise win by Donald Trump, the markets reacted very enthusiastically to that. The Dow Jones Industrial Average appreciated about 3% over the 6 trading sessions directly following the news about the election, as well as closing out 4 straight record highs. That's included in there as well. So far, at least, the street seems to be reacting favorably to Trump's less regulation, pro-growth agenda. Okay, let's turn our attention back now to the fund flows activity. We'll start by taking a look at the macro groups for this week. Equity mutual funds saw outflows of $3.4 billion. Taxable bond funds also had outflows, $2.1 billion. Muni bond funds, and a very high number for them, had outflows of $2.8 billion, and money market funds took in net new money of $3 billion. Let's take a closer look at the equity group now. We'll start with mutual funds. As I said, the $3.4 billion in net outflows. This marks their 36th straight week of net outflows for the group. It was back to normal as who was responsible for it. Non-domestic equity funds took the brunt of the hit, as they had $3.8 billion in net outflows, while non-domestic equity funds actually took in net new money of roughly $500 million. Let's move on to our equity ETF group, as that's where the big story was this week. Equity ETFs took in $27 billion in net new money this week. This is the largest weekly net inflow ever for the group. The inflows were concentrated in a few peer groups that are expected to prosper from Trump's campaign talking points of less regulation and rebuilding the nation's infrastructure. These five peer groups accounted for almost all the net inflows. S&P 500 index funds took in $8.5 billion in net new money. Financial services, $6.5 billion. Small cap core products, $5.8 billion. Healthcare ETFs, $2.7 billion. And lastly, industrial ETFs took in $2.5 billion in net new money. Moving on now, we'll take a look at our taxable bond group, starting with mutual funds. This group had net outflows once again, which can almost be expected considering the Fed is really telegraphing their intention to raise rates as soon as possible. So be on alert for a move in December. The group overall had net outflows of $2.1 billion for the week. Once again, the hardest hit were the riskier assets, as high yield funds led the way with $1.3 billion in negative flows. Taxable bond ETFs also saw net outflows last week, slightly higher than the mutual fund side. They had outflows of $3.8 billion. Once again, the main contributor here were the riskier assets. High yield ETF products saw $1 billion leave their coffers last week. Moving on to our muni bond group now. As I mentioned earlier, at $2.8 billion, a very large number for an outflow for the group. In fact, the largest weekly net outflow ever. It looks like investors are pulling their money out of the safe havens and looking to put it back to work. Once again, the risky assets were the hardest hit. High-yield muni debt funds had $1.6 billion in net outflows. Lastly, let's take a look at our money market fund group now. Things have settled down for this group since the new regulation went into effect. Seems to be slightly less volatile than we've seen in the past. Overall, $3 billion in net inflows. The biggest players last week were institutional U.S. government money market funds with net inflows of $12.2 billion, and institutional U.S. Treasury money market funds with outflows of $17.4 billion. Well, that wraps it up for me this week. Please take a look at our website for a closer look at the data. It's www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about that week's fund flows activity.